Good afternoon, everyone. This is Henry, and as we get into the free videos for tonight, I wanted to start off with Apple. So in Apple, and actually through these free videos, you can go back through the full list of them here on YouTube, but you can go back to find when this March monthly bar closed, because at that time, I was telling you that this is the first shift in monthly momentum that we'd seen, since the correction. So that shift in momentum has brought us to where we are now, right? New lifetime highs in Apple. But one of the most interesting things about this is not only do we have, the potential of a sell the news kind of event with a, big part of the developer conference behind us, but you've got some really interesting patterns in that you have failed at 185, which was the most important call strike coming into today, and you have a close below the primary fire line. So this study set works in a way that will provide the target to the upside, and once met, can either be resistance or at least a point of consolidation. So I think it's, dare I say, easy, but Apple should stay below 185 into Friday. And the decision as we get into Tuesday morning is really going to be what does it do against 180. If you're down below that and Apple's really looking pretty weak, look for the 21 EMA next. A flush that really can be thought of again in these gamma strikes of thinking failure at 185, and then no bid at 180 just brings you to 175. So they are $5 increments that I believe work well with Apple, a chart that I think is vulnerable until you do start to see a little more of a pullback. So that's what we've got there. And then of course, being such a primary piece of the SPX, you see the movement complemented here and the level that I want to make sure everyone is aware of heading into Tuesday, because moves tend to terminate at extensions of previous swings. And this is a very large one in SPX, right? We can see the swing highs that we had back here towards the end of a very bullish January. From there, you correct down into kind of the middle end of March. And if those are the high and low points that we're using, notice how that external retracement is right at the psychological value of 4,300. So I think you see resistance there. I think you see that, moving with Apple, you at least want to be open to the downside. If bulls stay more dominant, 43.51 is the next major overhead level. And we'll see what the story of this is when we get the thing started tomorrow. So I hope you find the work helpful. You guys have good trading, and we'll see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.